Paul, but we're going to look at Procter and Gamble.
I remember, guys, the 8 Pillars website has the 8 Pillars right there for you. You don't have to do the work, but either way.
Go ahead, Paul.
So much lower market cap, 316 billion, net income of 13.8, PE of 22, so that's an X. But again, nice profit margin, just like in on Johnson & Johnson. If you go look over here, their free cash flow in the last 12 months was 16.2 billion. 7.7 of that going to dividends to yield people about 2.5%. So 1X, one check, and they have enough money on hand in the last year to pay their dividends, and it pays a pretty decent 2.5% dividend yield. So far I'm liking it. Even though the PE is high, I like it.
Pillar number 3 is revenue growth for PG, Procter and Gamble.
All right, 65 billion, 74 billion. Check mark there.
Check mark. How about profit growth, Paul?
The profit growth is actually an X, 15.29 down to 13.85. X right there.
This was the same for Johnson & Johnson. Their profit's down. Shares outstanding is pillar number 5. We want this number going down.
It is a check mark. It is going down. I'm not going to get into the numbers because the numbers are inaccurate, but it is a check mark. It is going down. Balance sheet. Total current assets about 25 billion. Current liabilities of 32. So Johnson & Johnson had a better balance sheet than Procter and Gamble right now, right? Mm-hmm. We had about $20 billion more in cash on hand than current liabilities with Johnson & Johnson. With Procter and Gamble, we're in a deficit right now of about $6 or $7 billion, $5 billion, something like that.
Oh, so they're under. This is an X. Sorry.
Yeah, this is an X. This is an X.
Okay.
Free cash flow.
Pillar number 7 is free cash flow growth. We want this growing, of course. Paul.
I mean, look at this, 9.9 to 16.2. That's a check mark there.
Nice. Wow, really?
Yeah. What's the average, Sethi?
What are the numbers again? I'm sorry.
9.9, 10.2, 11.5, 13, 16.2.
The average free cash flow over the last 5 years is 12.
Times 20 is 240 billion, and it was a
$316 billion company.
316 billion. So it's an X there. It needs to drop by 25%, roughly. A little under 25%. I prefer to buy Johnson & Johnson. I don't like why are the current assets less than significantly less than the current liabilities? I got to understand that. And why is Johnson & Johnson so much better? I don't know. But I like that a lot more with Johnson & Johnson. If I were to make a decision right now, even though the PE is higher on Johnson & Johnson, I'd be leaning towards Johnson & Johnson right now. It doesn't have to drop as much to get to its price target for me.
What are your thoughts, Dr. Momentum?
Now, from a chart side, I am leaning towards Procter and Gamble, and that just shows you how different they are. So we are running, for those of you that have been around and paying attention for a long time, we are under our 32% line in a downtrend and just coasting along the bottom. So this is a perfect dog stock. This is a company where we can throw a tracker share on here, wait until we turn up over our 32% and hopefully buy this thing. And this, I mean, we are going to $146 a share. So there's possible $20 in gains right here. If you just buy this thing as a tracker share, one share, sit there and wait and let this thing develop over time.
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. The top tier patrons get direct access to Paul and TraderMo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. In comparison to other financial platforms, our software is by far the best value. This is your chance to get serious about investing. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.